The big story this morning continues to be Axis Bank. The Q2 performance missed the mark. We've seen a variety of reactions coming in. Some brokerages are saying it's not half bad. The extra provisioning which has come in this quarter will be also a bit of a concern. But there was a 26% drop in profits and a sharp rise in provisions. Has that outweighed gains in asset quality? Let me go across now to Gurmeet Chaddha, who's joining us this morning. He's Managing Partner and CIO at Complete Circle. Gurmeet, a very good morning to you, and thank you for taking out the time and joining us. I know you have a very interesting and packed morning schedule, so I really appreciate it. Let's hear what you have to say about Axis.
Hi, Tamanna. Good morning. I think the core POP wasn't that bad. If you see the deposit growth and loan growth, it was in early double digits. Used to be more high single digit, but due to the RBI inspection especially on the crop loan portfolio, which had been discontinued, they had to make that one-time provision of more than 1,200 crores. I think that impacted credit cost. As a result, the ROA also went down. But in a market like this, as I said, the market doesn't want any surprises, especially negative surprises. And so while the numbers are good, guidance is good. Actually, one thing which I liked was that they actually guided that it will be more than 3% in terms of growth, in terms of industry average, which means they'll be very aggressive. But as I said, the market would want more stability, less surprises. So more neutral on it. Had this provisioning not happened, I think the results would have been much better, and maybe some catch-up could have happened as far as the valuation goes with Axis and HDFC.
Okay, so Axis right now, because valuations at least are one spot in the pros list for Axis versus all the cons of provisioning, etc. Do you think valuations merit an optimism on the Axis stock price or buying Axis right now?
No, unlikely. But you never know how market reacts, though. But as I said, had this provisioning not come, the core would have looked better. The ROA and ROE, as a result, would have looked maybe 1.5% to about 17-18% ROE, and that did not happen. And so, Street would like to see. And also, there's been a transition with happening in Axis. Plus also the Citi acquisition did not play out as well as they thought it would, especially the card portfolio. But what I liked was the guidance and the fact that they've, the growth in CASA and loan portfolio was good. I think if you see one thing in Axis, the corporate loan portfolio picked up, which is also a sign that, which is a good sign more for the industry point of view. And recent RBI policy was more a credit policy, where, they've given a lot of scope, removing 10,000 crore cap on corporate loans, allowing acquisition finance. So over last 5 years, you saw retail loan portfolio being the mainstay. Going forward, I'll not be surprised if the corporate loan book starts, catching up and taking another larger bank's benefit.
Gurmeet, and so to that end, and good morning to you and season's greetings to you as well, Alex here. I'm just wondering whether you would be positive on some of these public sector banks. You saw Bank of Maharashtra among the top gainers yesterday after its quarterly results. This is a leg up for your major corporate banks, right? Which would be your large public sector banks.
Absolutely, and because of valuations, there could be some catch-up, especially with SBI. I think it's been consolidating for long, has the largest loan book, and they can really increase the corporate loan book in seconds, especially with acquisition finance. We have seen a lot of large Indian companies doing sizable acquisitions. And earlier it wasn't allowed. They either used to go to foreign banks or structured debt or approach the bond market. And I think that could be a big leg up for banks as far as credit is concerned. My concern remains deposits. And I think with new generation more interested in financial markets, deposits and interest rates falling, yields falling, deposits will be very hard to come by. So the preference would remain banks with very good CASA mix. And that is why I think it's good to stay anchored to ICICI, the industry leader, and HDFC now, with merger things behind, and tactically look at some PSU banks like SBI. I think the bigger opportunity tactically may also come in banks like Federal, like RBL more on the news of what's happening around. So a lot of...
I'll ask you about RBL, Gurmeet. RBL, how do you see it? Positive development. We'll probably see the decision in the next couple of days. They've announced their board meeting. And does it have a spillover effect for, say, a Yes Bank or some of the other private banks?
Could be. See, with a disclaimer that we are in RBL and we entered a little earlier, got lucky there. But if you see the lot of good news in terms of this event, while the formal announcement is awaited, has come. You know, the stock is up from 30-40% in last quarter or so for the year. I think it's almost doubled if I'm not wrong, maybe slightly less than doubled. So some of it is probably getting factored in it, but you know, an Emirates coming and with the kind of stake markets are talking about, would be interesting to see the open offer and what price it comes at, because that would decide more of, you know, whether it will happen or not. Otherwise, some profit booking can happen if the open offer price is lower. But very good for the bank. See, operationally, it's been very weak. The credit card portfolio continues to show stress. Although the MFI is now showing signs of stabilization, trades at about book value. It was almost trading at 0.5, 0.6 book value at the beginning of the year. So I think some of the catch-up has happened, and now it depends whether the news fructifies. And I hope that, you know, the open offer is more in line with what market is expecting and not much lower.
Quick word on RBI minutes from yesterday. Clearly, there's a split on the pace and timing and quantum of rate hikes going forward. That was clear from the minutes that we saw. Do you think a bit of pressure on the Bank Nifty and banking stocks, especially before the market hour Saturday when you have two big private banks reporting?
No, I don't think so too much about it, because, you know, the inflation continues to be, look at wholesale inflation is 0.1, retail inflation is 1.5%. In fact, I'm of the opinion that with kind of a debt crisis we are seeing in globally, especially Western world, both Europe and US and UK, Japan also, I think all this entire thing of they being better credit rated and emerging markets being low credit rated could be challenged if rating agencies are more neutral, I would say. I think it could actually now mean that, you know, markets like India, etc., may have lower rates for longer with the fiscal discipline we have shown. So, and the inflation being benign, GST impact also will get passed on. So I'm not too worried there. I think, in fact, on rate sides we are headed lower, and I think we'll soon see Indian 10-year bond also sub 6%. Just a matter of time.
All right. Thank you so much, Gurmeet.